Most people invest in the wrong order, and it quietly costs them thousands in missed opportunities and unnecessary taxes. Before you buy stocks, crypto, or index funds, there is a smarter sequence you must follow to ensure your success. If you skip even one step, your entire financial plan becomes fragile, leaving you vulnerable to the next market downturn or personal emergency. In this video, I'm going to walk you through a simple step-by-step order that works for both beginners and experienced investors who want to prevent costly mistakes and build a rock-solid foundation. Pay close attention, because step 4 is where most people lose years of financial progress without even realizing it. By the end of this, you will have a clear, bulletproof investing strategy. The big mistake most investors make is jumping straight into the deep end. We see headlines about a new cryptocurrency or a tech stock that is skyrocketing, and the fear of missing out takes over. People dump their life savings into trading or real estate before they are actually ready. The problem with this approach is that you have no safety net. This creates high stress and often leads to forced selling. Imagine you invest $10,000 into the market and then suddenly your car breaks down or you lose your job. Because you have no cash reserves, you are forced to sell your investments at a loss just to pay your bills. Smart investors follow a specific order to avoid this trap, and here it is. Step 1 is to build a starter emergency fund. This comes first because it prevents you from falling back into debt and protects your future investments. Your first goal should be to save between $1,000 and $2,000 as quickly as possible. This is your oh no fund. It is not for a vacation or a new phone. It is for those unexpected expenses that life throws at you. Having this small cushion keeps you from using high-interest credit cards when things go wrong. Financial stability begins with peace of mind, and knowing you have a small pile of cash sitting in a high-yield savings account changes how you handle every other financial decision. Step 2 is where your money starts working immediately. Step 2 is to capture free money. This is a high-value step that acts as a major retention driver for your net worth. Most employers offer some form of retirement match, such as a 4.01k match. If your company offers to match your contributions up to 5%, that is an instant 100% return on your money. No stock or crypto coin can guarantee that kind of risk-free growth. You should also look for government incentives or tax-advantaged accounts available in your region. This is the compounding advantage at its finest. If you do not take this match, you are essentially leaving part of your salary on the table. But remember, this is not where you should put most of your money yet. Step 3 is to destroy high-interest debt. This is where you develop a strong emotional connection to your financial progress. Credit card debt is a guaranteed loss. Many people try to invest in the market hoping for an 8 to 10% return while they are carrying credit card balances with 20% interest rates. That math does not work. You are losing more than you are gaining. Paying off your debt is the same as getting a guaranteed return equal to that interest rate. A common viewer mistake is trying to be a sophisticated investor while carrying high interest balances. Once this step is done and those monthly payments disappear, your wealth starts accelerating at a pace you never thought was possible. Step 4 is where we enter the security phase by building a full emergency fund. Now that your high interest debt is gone, you need to save 3 to 6 months of your living expenses. This is the step most people skip because it feels boring, but it is actually the most important protection you can have. It protects you against job loss and market crashes. When the market drops 30%, people who do not have an emergency fund panic and sell. People with 6 months of cash stay calm and keep buying. This step provides the psychological benefit and the confidence to invest long-term without fear. Once you have this fully funded, we move into real wealth building. Step 5 is the core of your investing journey, where you invest for long-term growth. This is the main value section of your financial plan. You want to focus on low-cost index funds that track the total market or the S&P 500. Consistency beats timing every single time. Instead of trying to pick the next winning stock, you should practice dollar-cost averaging into diversified retirement accounts. Low fees matter because high expense ratios can eat away at your returns over decades. A simple allocation idea is to keep the majority in stocks for growth and a smaller portion in bonds for stability as you age. This is where most of your long-term wealth is built. But the smartest investors do not stop here. Step 6 is about learning to optimize your taxes. This adds a level of sophistication to your plan and boosts your perceived value as an investor. You need to understand the difference between tax-deferred accounts like a traditional retirement plan and tax-free accounts like a Roth account. Taxes are a silent killer that reduce your total returns over time. Even a 1 or 2% tax drag over 30 years can cost you hundreds of thousands of dollars. By strategically choosing where you hold certain assets, you can keep more of what you earn. Understanding long-term capital gains versus short-term gains is essential. This optimization ensures that your hard work isn't drained by the government. Step 7 is where money starts giving you freedom. Step 7 is advanced wealth building. This is an exciting and aspirational section because it moves beyond the basics of index funds. Once your foundation is built, you can look into multiple income streams like real estate, starting a side business, or focus dividend investing. You might decide to put extra money into your brokerage account to speed up your path to early retirement. The key idea here is that you only take these risks after your foundation is built. If a business venture fails or a rental property sits vacant, it won't ruin you because you followed the previous steps. This is how you create generational wealth and achieve true financial independence. But there is one final step most people ignore. Step 8 is to protect your wealth. Building wealth is completely useless if you do not have a plan to protect it from being taken away. This involves the basics of insurance, including life, disability, and umbrella insurance. It also includes estate planning and making sure your beneficiaries are correctly listed on all your accounts. You have spent decades building your net worth. You must ensure it goes where you want it to go if something happens to you. Protecting your wealth is about more than just numbers. It is about providing security for your family and ensuring your legacy remains intact. This final piece of the puzzle completes your smart investing order. Let's do a highly satisfying recap of the complete smart investing order. First, save a starter emergency fund to handle life's small hiccups. Second, capture all free money through employer matches. Third, pay off all high interest debt to stop the bleeding. Fourth, build a full emergency fund of 3 to 6 months to stay bulletproof. Fifth, invest consistently in long-term growth through index funds. Sixth, optimize your taxes to keep more of your profits. Seventh, explore advanced investing like real estate or businesses to accelerate your growth. And eighth, protect everything you have built with proper insurance and estate planning. This specific order minimizes your risk while maximizing your potential for growth. Following this sequence is the most effective way to reach your goals. You do not need to be rich to start this process. You just need to start in the right order. Many people feel overwhelmed by the world of finance, but when you break it down into these 8 logical steps, the path becomes clear. Success in investing is not about having a high IQ or getting lucky with a meme stock. It is about discipline and following a proven system. Wealth is not about how much you make. It is about what you do first with every dollar that comes into your life. Follow this smart investing order, and you will find that managing your money becomes easier and more rewarding every single year. The journey to financial freedom is a marathon, not a sprint. By prioritizing your starter fund and your employer match, you create immediate momentum. By attacking your debt and finishing your emergency fund, you create a shield that makes you untouchable during economic downturns. Once that shield is in place, your long-term investments can grow undisturbed, fueled by tax efficiency and advanced strategies. This is the blueprint used by the most successful individuals to stay wealthy, not just get wealthy. Start today with step 1, no matter how small that first contribution might be. Every great fortune begins with the decision to follow a plan. Take control of your financial future by respecting the order of operations, and the results will eventually speak for themselves. You have the tools, you have the sequence, and now you have the plan to make your money work for you.